The global share index slipped into an official correction over the weekend, down more than 10% from the peak on July the 31st. The falls in August and September were due to concerns about a return of inflation and higher interest rates. But now the baton of gloom has been passed to the conflict in the Middle East. There was a small kick-up in US inflation reported on Friday night, our time, but the big picture is that the Federal Reserve's preferred measure of inflation, which is the Personal Consumption Expenditure Index, PCE, is basically back to where it was before the pandemic. As for Australian interest rates, well, there was more support today for those who think there'll be a rate hike next week. Retail sales in September rose 0.9%, 3 times what was expected and 3 times the rise in August. Essentially, Australian retail trade is $5 billion a month above the pre-pandemic trend and showing no signs of returning to it. The oil price jumped over the weekend because of Israel's ground invasion of Gaza, and gold was also in demand as a safe haven, going above $2,000 an ounce for the first time since May. Shares in New York, London, Tokyo and Hong Kong all fell, and so did the Australian market, with falls among retailers, banks and energy stocks, while miners went up. And the Australian dollar is up a tick at 63.5 US cents. And that's finance.